More private equity firms are getting spun out of investment banks, and some are spinning their wheels with their newfound independence. Over the last 5 years, banks like B of A and Citigroup have spun out private equity firms to comply with anticipated requirements of the Volcker Rule. Last week, JP Morgan announced it would spin out One Equity Partners, the final remnants of its in-house PE operations. Already, Jamie Dimon's bank has spun out several investment firms, among them CCMP and Irving Place Capital. How dependent was One Equity on JP Morgan for its capital? The private equity firm only had one limited partner, the investment bank, which means One Equity will now have to go out and compete with other PE firms for investor capital. And that's where the problem starts for so many private equity firms. Irving Place, Mid-Ocean Partners, spun out of Deutsche Bank, and Diamond Castle Holdings, which used to be part of Credit Suisse, have all struggled since becoming independent of banks. Irving Place and Mid-Ocean had to extend their investing periods, so maybe don't expect them to go out fundraising anytime soon. As for Diamond Castle, when one of its founders departed, the PE firm had to make concessions with limited partners so that it could keep making deals. Some private equity firms have thrived with their newfound independence. This would include former B of A shop Ridgemont Equity and Pamlico Capital, which used to be affiliated with Wachovia. Both North Carolina-based shops touted positive returns separately in successful fundraisings. Other PE firms are sitting tight, or at least their parent companies are. Reuters reported earlier this year Goldman Sachs was exploring regulatory loopholes to allow its PE operations to continue. Goldman already runs a PE operation in-house that manages $20 billion from its most recent fund. Citigroup is also in the PE game, operating Metalmark Capital, which last year raised $2.5 billion. When asked what the plans for the firm were, a representative said that it was considering several options for the firm. As for whether or not Citi or Goldman spins out their PE operations remains to be seen. Otherwise, the fundraising scene could get a little bit more crowded, which would mean a little bit of problems for other private equity firms who have also been spun out. I'm John Marino, and that's the deal.